The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As usually, we come to you at this time. Oh, for some reason, this thing doesn't like me today. How about this? That? No. It's broken. I broke it. I don't know how I did that. Let's try it again here.
The following takes place between 2 p.m. and 3 p.m.
And we'll get, you have to do it twice to get it done. Okay, S&P cash is up 2706. Thanks for all those emails and letters from subscribers and listeners. We've been talking about this and how options can many times give you a clear roadmap, at least into Friday's expiration. We were looking for 2,700 to 2,720 on the S&P cash. That went to 2,700 to 2,725 yesterday. We'll see what tonight's look like, but they were kind of stayed at that range yesterday. So we're kind of in the range that we're looking for options expiration. And the question is, how many people are going to pile on short and then exit before the end of the week? And that's just the gravy, because unless we get some kind of news out here to make this market go down, even with kind of lighter volume, I suspect that we can maybe spend another 7 or so days, trading days, up here in this 2,700 area, maybe go as high as 2,750. If the volume remains light, that's probably at 2,750 is probably where you would want to start thinking about going short. I'm starting to see a lot of interest in the equities I have, which means when people start thinking about buying what I have, I think about start selling what I have to them. You always want to sell when you can, not when you have to. And when there's a willing buyer and you have a good profit, good time. I've got 3 equities and some other stuff in the daily newsletter. I think we got, what, 4 in the long-term newsletter. And, you know, we may be getting to the point where it's time to let of these stocks that are fairly profitable go. We'll have to see if volume remains light, but it can remain light for a while. My guess is that what we will probably see is what we've seen in the past, and that is when stocks were cheap, no one wants to buy them. When stocks are expensive, suddenly everybody shows up to the party. And you don't want to be the last person at the party to stay, do you? But we'll see. Anyway, I'm not looking for a great deal more higher in the S&P. One of the things that could actually happen, though, is the SMHs can get going. We'll talk about that today and why that might be it. I just wouldn't be shorting the SMHs through the next few days. And like I said, we'll tease. That's what they say in the industry, is a tease. I'm teasing you. Anyway, Dow's up 219, NASDAQ's up 123. And yeah, I can see maybe those SMHs taking a pop on short covering before the end of the week, and maybe not seeing so much out of the S&P, but seeing a lot more out of the NASDAQ. What else do we have going on? A handful of stocks moving on earnings. We'll talk about earnings tonight and tomorrow in the next few days. Man, we got a lot of stuff going on. You can give me a call at 877-927-6648. You can email me at path@tfnn.com, and you can always put a message in the den if you're in the tiger's den. And I don't know what else we can say about that. Yeah, I think we got a little bit more road to go before we hit that end of road sign to the upside. The question is how tough. To special thanks to my subscribers this morning that were faster than me when it came to getting an email out this morning. You know who of which I speak. There are a handful, and we'll get to that in the newsletter tomorrow morning. What else do we have going on? I think that's it. Let's get to a little bit of news. We'll talk about what's going on in the market and what we're looking for in the next few days of expiration. Did I tease your girlfriend and HS? I don't know what HS is. A tease is in the media business where they tell you what they're going to talk about, but they don't talk about it right then. Oh, high school. I try to forget high school. That was a very tough time. Anyway, what else do we have? That's about it. Let's get a little history.
Then it's all just a little bit of history repeating.
In 1970, on this day, we see an Apollo 13 capsule, U.S. lunar spacecraft that suffered a severe malfunction on its journey to the moon, safely returns to Earth. And, of course, maybe the last time that we really got together as a country. Maybe. I think we've had a few other times that came close, but not like that. In fact, actually, even the world. We're waiting for our guys to come back from the moon. Of course, a scant, 20 years later, 22 years later, I would have never thought that I would be in special effects in television in Hollywood. And I was working on a movie called Apollo 13. My job was to put together a bunch of video equipment so that they could preview what was and is called stop motion animation. They built 1/3 scale models of the lunar module and, of course, the Apollo capsule, I think known as Aquarius, as its call sign. And it was on a soundstage in Venice Beach. So I had a cushy few weeks there. My job was to make sure that these computers were synced up to what is basically the largest CNC machine ever built. This thing could move things hundreds of feet in this studio. And basically the camera would move, the scale models would stay still. And the whole point of the exercise wasn't just to film the capsules, but get all the background correct, i.e. my devices would put everything on video and let them layer it up so they could work out the movement of the camera against the backgrounds that were going to be superimposed so it all looked perfect. Basically that got used again on along with some other stuff I did on Titanic. But that seemed a big deal out there. And of course, I always loved the day that they sent me up to the Walmart to get cassette tapes. When you see the side of the Apollo 13 capsule command module explode, that is a bunch of cassette tape run through a shredder. And I always enjoyed that. Anyway, we'll be back and we'll talk about the market.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, that's about it for that. So we'll get into this. Okay, else what do we have? Okay. Okay, already answered you, Bill, Tom, Andy, and Sheila. Okay, so I think I'm all caught up. Let's go ahead and start looking at some charts. First thing I want to do is talk about the SMHs. There are some big shortages in some areas of the semis. And I'll be talking to Tom O'Brien on that on Friday. But right now, I wouldn't be jumping out on a limb and shorting anything in the semiconductor sector at all. If any of these stories really start to break in the mainstream press, what you're going to see, I think, is a fairly decent short covering into Friday. And maybe they don't break this week, maybe they break next week. But I think those stories are going to make the rounds. I've been able to, I actually stumbled across this in one of my YouTube videos that I watch every day. I've got all the channels I watch. Anyway, this one was in technology, and it talked about how the shortage had been around for a week or so and was only going to get worse. So what you want to do is just kind of avoid this sector right now. If you want to go long, I don't know if you could go long it, but I certainly would not be short. My guess is that we could see the SMHs get back up into this 110 level next week if this stuff gets any traction. And again, a lot of times it doesn't have to be true, but I've pretty much independently verified that it's true, and it's not that tough. So we'll probably talk about it on Friday with Tom O'Brien, but would I be surprised to see 109, 110 on Friday on the SMHs or the first couple of days of next week? The answer is no. Too many people shorting already. And my guess is that if the market was going to fade today and not on May 1st, which is kind of my first target area, that we probably would have seen the market fail already. And do we have to go much higher? No. All we do is have to kind of stay here for the next few days. And shorts are going to slowly start looking at Friday and go and blink. One of the worst parts, and I had to learn this the hard way, of being short is you're on the side with the weakest hands. Shorts are, or people that do short, are 10 times more likely to make a day trade. People that just go long do not. They don't get in and out of the market every day. But shorts do. They're in it for a quick score. And as soon as the market starts to turn against them, if you don't have a good position, you're probably going to be taken out and stopped out with any kind of reasonable stop by the weakest hands there are, and that's shorts. So I don't see any reason to start pulling the trigger here. I understand that the volume is light, but we're into options expiration and into earnings, which have mostly been good. Now, they're selling them off, which is not a good sign, but the ones that they're selling off are the financials. They're not selling off the ones like Netflix and FLX. If you just kind of make it or make it a little bit better, you get sold off. What's not getting sold off if you blow away the expectations, as Netflix has done. Goldman Sachs, is it going to do well because of the new tax plan? Yeah. Are companies with lots of money overseas going to do extremely well? The answer is yes. And Netflix, of course, has gone into 36 countries now, maybe more. I think 12 of those in the last 6 months. And now those things are, other than the costs, they're not making a whole lot of new content for these guys. The content they are making is fairly cheap. They're not making and spending $10 or $20 million on the content. In fact, if you accidentally click on some of the India's content, you'll find that you get loaded with it. As a suggestion, I've got a friend that I meet at the dog park. She's always complaining that she gets all these movies from India, and she showed me one of them. These things are pretty low budget. My guess is they were made for $50,000. But she accidentally watched one of them and walked away, and I think the whole movie played. So Netflix thinks that she loves these Indian movies now, and there's tons of them. But they don't spend lots of money making them. The big money, well, I guess what? Netflix came out with Lost in Space. That looked like fairly expensive. Amazon came out with the fourth season of Bosch. And I kind of like it. But yeah, keep an eye on those. What else do we have? Okay. Let's come back here a little. 2703 on the S&P cash. When we look at the volume, got a question about it. And 3.6 billion shares. So we're going to be kind of a little bit light on that, but we will keep an eye on it. Okay. Okay. And let's see, I got any more emails? I've got a couple. Look at IBM. Let's take a look at that. Anyway, Netflix, a nice pop. We're going to look at some short squeeze candidates also today. Okay, IBM. So we're going against the 162.11. 162.11. That's 5 million shares. You got you got 5 million right now. So you're going to have at least the same volume on IBM, which has been typically one of the weaker stocks out here. Energy is about the same on the way up, on the way down on my power law vector indicator, from that March 13th high to the April 4th low up into the high of today. So a lot of these stocks gained a lot of short positions on the way back up, and even the last few days. I've been highlighting in my newsletter in the morning the put-call ratio, which has gone to the moon. And yet again yesterday, we went through even a higher high in volume with puts. So generally, that's kind of an opposite sign. That is, everybody jumping on board short is generally, as I've said before, 3 days early, or 3 hours early, 3 hours early, 3 days early, 3 weeks early, or 3 months early. And my guess right now is that those guys have kind of started doing that about 2 weeks ago. So maybe they're still a little bit early, and maybe we see a little bit more. But I mean, the heavy volume in puts makes me think that we're going to hang up here at least a few days earlier when everybody decides to get on one side of the boat. Generally, the big money is on the other side. When you agree with everybody, it's time to pause and reflect. We'll be back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I got questions back here. Why the headphones? Well, I got stung by a bee in my ear last week. And why it's gone down? I like headphones better. Maybe I'll go back to the earbuds, but I couldn't even wear them for a handful of days. I mean, it got right in there and stung me right in the ear. To be or not to be? Okay, got another question about AK Steel. Is this thing finally on the road? And you know, you got a good move today. You want to see a little bit more volume out of it. It's going into the candle of the 22nd of March, 27 million shares. You got about 11 million shares today. I mean, it's made a bottom. The thing should have V'd, and generally I lose interest. Does it mean it can't go up? The answer is no. Is it going to kind of drift up? Yeah, my guess is this thing hits $5 for Friday. But again, you know, if you're 50 cents on this, probably not a bad trade. But yeah, if it hit $5 tomorrow, I probably would be out of it. The reason why is options expiration setup. Normally what you're going to get during this week, or the normal pattern, is a push into Wednesday, late into Wednesday, little fade into the close on Wednesday. Market pulls back a little on Thursday. You go back and retest or maybe exceed the Wednesday high by just a little. And then, of course, you go into options rollover on Monday and Tuesday, where they push the market up one day and down the next. And you get into the true direction of the market come Wednesday, but that already gets us real close to fund buying. And we've got another percent higher, percent and a half higher into fund buying. So that's got me where I'm saying that maybe that 27.50 is kind of where I'm thinking that after into fund buying, if fund buying's weak, that's about much we get. Now, the opposite side of that scenario would be, of course, lots of money starts coming in and everybody gets all giddy again. Now, since I don't try to forecast the future too much, and somebody warned us about forecasting compared to scenarios, I'm going to say that that is my scenario. And when I come to the fork in the road, I will take it. But right now, I don't see any big signs out here of people doing anything nasty to the market, like piling on to the point where they could crack the back of this market. I just think we're going to drift up. Question also is, are we going to hit 27.20 by the week? I think that's probably at 27.25 on the cash. If it's going to hit it, it's probably going to hit it tomorrow. You hit 27.20 tomorrow, pull back a little bit, maybe to 2,700 on Thursday, and then go up there and hit 27.25 for the close on Friday. Wouldn't be impossible. So just keep an eye on it. But that's kind of the pattern, usual expiration pattern that goes on during expiration week. Of course, again, you can email me at path@tfnn.com, or you can give me a call at 877-927-6648, or put a message in the den. And I will say I am looking forward to your dulcet tones on the phone today. Since it's going to be kind of quiet, we're going to look at a few stocks out here that are fairly interesting. This is a list from the website I gave you yesterday of the stocks that are the most heavily shorted. And these things, of course, as long as they keep going up a little bit, going to see those weak hands continue. But my guess is that we're much more likely to see a lot of these stocks like Fossil up into the previous highs. In this case, this $18 high of February 14th. We're kind of at the very, or in the wicks of that. But my thought is that if this thing would get in about $16.75, $17, and you continue to see very light volume, pretty good indication. If you start seeing a lot of stocks like that, then the market's topped out. We've had some already kind of turned south on us. Hertz Global just did a dark cloud cover of about 5 days. But everybody knew that stock was kind of weak already. One of the ones that I thought was very interesting and didn't know how many people were shorting the living dog doo-doo out of it. That's a technical term for technical trading, dog doo-doo. Should I use doo-doo or poo? Anyway, a lot of huge shorting in Red Robin, which I find personally offensive because I love their cereal malt beverages and big burgers made out of great meat. I mean, real manly meat, not this kind of fishy tacos that you get from Del Taco. I mean, stuff that plug your heart, along with give you gout. And so Red Robin, one of my favorite places. It's back into this gap, though. But again, massively shorted, and not uncommon to see these things get shorted all the way up, only to see these things wash everybody out. My guess is if you wanted to ever be short these stocks, I don't know why people don't do it, but just wait until it fills at least half of the existing gap in it. And if it's great and you get light volume, the entire gap, which take you to almost $67 in this thing. And of course, it's a restaurant. It's pretty good. But we'll look at some other things. Okay. Anything else out here? Now, I haven't looked at data in a little while, so let's take a look at that. What do we have here? Tableau software up. Volume a little bit better than a handful of days, so that looks pretty good. Again, probably going to get up to the $87 range, which is the two previous highs. Never actually got the full pullback. A little bit more juice up here. 87 looks like it would be fairly tough. CRM Salesforce has been buzzing along quietly higher for a while. But again, you're back into this big gap down that goes from the 21st of March that had 14.8 million shares, and you got 3.7 million shares. So maybe you get 125 out of this thing. And my guess is if I look at this closely, in fact, let's do that real quick. CRM, what do I got? Not much shorting. Let's see what the monthly shorts. Only 2 days to cover. But that may be enough to get it up to 125. So you don't have much left to go before this thing gets in fairly heavy resistance. But again, a lot of these stocks are getting set up and probably just going to go up on light volume into earnings. We are that close in a lot of these tech stocks, a lot of them first week or two of May, so we're not that far away. Generally, when you get into within 3 weeks or maybe as long as a month, you start getting you get kind of a little magnetic attraction back up to those highs for earnings on these high flyers. And maybe that's what we're going to see in Salesforce too. I will check their earnings date during the break. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Well, we already talked about IBM, which comes out with earnings after the bell. We also have Intuitive Surgical that's pushing into earnings after the bell. These guys have been picking it up and laying it down for a number of years, but always seems to have a fairly decent 10 or 20% move on earnings. So that will be interesting. Lam Research also after the bell. And what do we got? That's up today. It's got some juice into it. It's into this 4.2 million share candle from 27th of March on the downside. So you got 3.5 million shares compared to, we're probably going to tie that down volume already. So it looks pretty good. A lot of room to the upside. 234 probably would be about it. Maybe the gap at 222, room 222. Oh, I like that girl that was in that. But I always confuse room 222 to the Mod Squad. I think both of those came on right after each other. Okay, so what do we have? We got that, Intuitive Surgical, IBM, United Continental, UAL. And, man, this is just in a triangle. So this one may bust out one way or the other, and you want to fade that. Probably false move head, fake. And the one that I'm probably most interested in after the bell tonight is CSX. The reason why is I'm not exactly sure that this energy craze pop in the last week can be sustained. Now, this, of course, is also in another big triangle. But the interest I have in this is what they say, which is if all that oil is really starting to come out of the Northwest, these guys make money both ways. They make money shipping sand up there, and then they make money shipping crude back. And so this is kind of like turning on a light switch for these guys. Now that crude's kind of gone up a little bit, the question is it gone up enough for these guys to really start seeing them ship sand up for the more expensive kind of mining and the fracking up in that area? So haven't heard a lot from these guys. It's been in the quiet period, but we'll hear that in the earnings tonight, or at least that's what I'm going to be looking for and hoping these guys say, you know what, they haven't been ordering sand, and maybe we'll get a little bit of business, additional business, and bringing crude back into the main part of the country. But But if they're telling me that they're seeing big orders for sand, I think that tells you that at least the people in the oil patch believe that there will be an extended movement in these higher prices. Now, this morning, Venezuela, oil guys all just walked off the job because they haven't been paid in 4 weeks. Another check mark for socialism and communism. A perfect record over 6,000 years of recorded history of failure. And why I always wonder when people tell me how they like socialism, I know that they've never read history, or they haven't told me why what they're doing this time is different. Because guess what? You can wait for the world to change, but we may get smarter. But human nature does not change that much. Always a problem. Okay, so we got that. We got interactive brokers after the bell tonight, but that's not a big deal. Got a handful of others. Now, a question from the den about whether I would short Microsoft if it hit 100. And the answer is I would have to see something very different than what we're going to see here. We're basically hitting a triple top on light volume today. What was MSFT? Okay, April 26th is earnings for them. So this certainly is not going to fail before that. That's next Thursday. The answer is, would I short this on a hit of 100? I don't think so. And if these guys whiff on earnings, it's going to close down. If it closes high, or if it closes higher on earnings and blows out 100, I think you're going to have at least 3 days for people that are shorting it already. I can see from my little matchsticks down here that people have been shorting it. Well, not horribly, but enough. I'd want to give it 3 days. But even then, what are you going to get, 92 bucks out of it? So a scale goes to 101 or 102 for earnings, and then you're going to look for a 10% move down. I mean, if you could get the options, like for $1 for the 100 puts, that may be a play. I just don't understand making a play that has a kind of a maximum of about 10% upside. Just not enough risk reward for me. And again, I've got to find something that Microsoft's doing wrong, and I haven't seen it. So let's take a look at Intel, the other half of Wintel, because they looked like they were doing fairly good. We're going to talk about it probably at length with Tom on Friday, too. These guys have come up with a fairly neat idea on security and how to handle it. And I think that little bounce that they got today was a little test of this top at 45, at 53.78 for March 13th. We basically 8 cents under that. We'll probably see that test tomorrow. Energy on the way up is pretty good. Again, I think we're too close to earnings on this to get too excited. It also is on April 26th. And my guess is in a week, you're not going to see this thing depreciate any time soon. So Thursday next week, we get into Microsoft and Intel. And again, probably, you know, you can certainly see these things. Neither one of them look bad to me. Could there have been a little bit more volume? There could. But everybody is in a foul and nasty mood, probably from the degenerate news press who they couldn't see a blue sky and report it right now. They are so negative. And why I don't pay much attention to the nabobs of negativism from Fifth Street in New York. It's just not worth it. Can't afford a negative attitude and can't afford any negative waves right now. I do say that we probably do look like some kind of top coming around the May 1st, May 3rd, kind of first couple of days the next month, maybe after fund buying. But I just don't see anything that says and screams that. It just screams to me like a lot of people don't want to buy now that are scared. A lot of people want to short. And my guess is if we do go up any higher, they're all going to want to buy. Not when it was at its lows, but when maybe it's close to its highs. Okay. What else do we have going on here? Okay. Microsoft and Amazon. Take a quick look at Amazon when we come. Oh, only have one little segment here. Got a couple of emails we'll need to get to, and that is it. Okay, we'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back, of course, knee-deep in earnings season. Of course, really getting into it next week. Couple after the bell, and then, of course, what do we see? Do I even have that? Where's it at? Did I lose it? Oh, no, it isn't there. Okay, so we've got a few of those tonight. We already went through it. In the morning, we've got Abbott Labs, Morgan Stanley, ASML Holdings, U.S. Bancorp, Textron, Magic Investment Company. And I would have changed my name in this because there's a bunch of things around in the market ads, phony ads, I should say faux ads that have been around forever, which is always Magic Investments. If it shows a profit, you know it's magic. I always love that. I think that joke goes through about 400 different industries, but I don't think I would want that just because of that joke that I remember all the time. I'm sure they are a great bunch of guys. I don't know that much about them. But I think they're, if I'm not mistaken, they are the leading provider of private mortgage insurance coverage in the United States to the home mortgage lending industry. So that is the one that I've kind of been thinking of that will be very enlightening in the morning. You know, some places look better, or MTG, did I put that? MTG. The one that I think will be fairly interesting. Now, it already blew apart on the housing sector, but what they actually say tomorrow morning, I think which way that moves is going to be quite enlightening to what we're going to see in the near future, at least in the housing and building sectors. So a good one to look at. Join us in the den tomorrow morning. Of course, sell when you can and not when you have to. And we will see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.